10 years from now, you're going to have your device and you're going to have everything on it. You're going to have gambling, you're going to have futures, you're going to have your equities, you're going to have everything in one place. Now, from a regulatory standpoint, how you get there, I'm not sure, but that's where I see it going. I see them all being together, and obviously the predicted markets and the gambling, they need to have some oversight there, right? Whether it's the CFTC, all of the bodies have to have the same rules for it, and it has to be clear and distinct with what those rules are, because that's a bit of an issue, like not knowing exactly what the rules are within there, and globally what the rules are.
What did you find in India when you were looking for talent?
We saw that same energy and excitement that was in that Eurodollar pit when it was really juicing. That was that same energy we saw in India. And so we were there for 3 days and maybe had 100 traders come through in 3 days. And so we're like, okay, we're going to set up operations here. So we set up operations in India. Today we have over 100 traders there, and we also have offices in Eastern Europe, and we're spread out all over the world, really, and we have traders all over the world. We go to wherever that talent is. 80% of our business is futures trading, so we trade a little bit of cash treasuries, equities, FX spot we're getting into. We trade cryptos. We have about 200 plus traders globally. But then we've started to expand into other industries. So we started to create our asset management that's taking our scalable strategies and rolling them up into hedge funds. And in that process, we also have our fund management. It's a service entity essentially for everything hedge fund related. So they handle everything from the ground up for creating hedge funds.
What are the newer products you are interested in?
A lot of the exchanges come to us when they're starting products, right? They're trying to get products off the ground. We sit in that area where, we do market making, and we really can help the exchanges on new products. The problem is that it's more and more expensive to get into each of these asset classes and products, and access points and data, exchange fees, regulatory, software, everything just keeps going up. It's not like the value of the tick sizes are changing. Something like 17% on average, our costs as a whole have gone up each of the last 4 years. So more than double when you add it all up. And that cost is on the traders then. They have to support that. And we have attrition too. It's 20% attrition within traders, right? So you gotta keep feeding and finding new talent, and that comes in, and that's why we're global, because it's harder to find that talent in the US.
What makes a good trader?
Number one is discipline, right? They got to be disciplined. When the market is going against them, when they're having those losses, they got to be able to be not a deer in headlights, be able to think and rationally get out of that trade or get into a trade. Work ethic, it's a lot of hard work. It's a lot. You got to devote your time. It's why I stepped back from trading, because when I was trading, I needed to wake up before the market, focus on it, get all my data and information together, and commit that entire trading day to the markets.
How are you adjusting to a 24/5 and 24/7 world?
24/5, we're already fully in. We're spread out globally around the world. We have 24/5 risk team we support. We have risk all across the globe, so they just keep rotating hours-wise. We probably have an advantage in that component because we're so global. So we have that covered. Now moving to even Sundays, right? Our clock starts Sunday at 5 p.m. That's when it starts, and it ends Friday. So we have to cover then, if it goes to there, you got to cover from Friday to Sunday. We're prepared for it though. We're ready for that. Crypto's already there, right? So we're already partly doing that with the crypto. Now, once the traditional markets go, which Terry Duffy said last year that it's not a matter of if, but when, they move to that. I think the back office technology has to get there, and the banking.
What is driving the cost of data going up?
Exchanges, that's their largest revenue increases, is the data revenues. When we started our 11 years ago, there was zero data fees. Like we didn't have data fees. Now, I mean, we pay the CME, well over $1 million a year just in data. That's just CME, right? So all those different exchanges, we have data fees across everything. When a trader wants to jump into a new market, he's got data fees, right? When we're doing quant work, we have data fees for everything that we want to trade. We need to pull that data in. That has a cost. I mean, that has to reach a point. You can only pull so much from traders, let's say, for those data. Like those revenues can't keep increasing at 15% a year. So hopefully something gives on that front, and it's capped, and because you can't just keep going down that path.